Hello, my name is Jingo Nelly, and I'm going to be taking you through another part of partnership. And before I begin off, I'm going to require you to subscribe and also follow what I'm pointing at for you to be able to follow up properly. So with this example one, it reads Nelly and Peter are in partnership sharing profits and losses in the ratio of 6:4, meaning Nelly is having 6, then Peter is having 4. Then the following is their trial balance for the year ended 30th June 2001. Now these are the details, and this is the debit and the credit side. So with the office equipment at cost, we are having 13,000. Then motor vehicles at cost 18,400. Provision for depreciation, that is the motor vehicles, it is 7,360. Then office equipment is 3,900. Then we're having the opening inventory, which is 49,940. Then accounts receivable, which is 41,920. Then accounts payable, which is 32,550. Then cash at bank, which is 1,230. Cash at hand, which is 280. Then sales, which is 180,740. Then purchases, which is 143,260. Then we're having these were purchases. Then salaries, which is 16,834. Then office expenses, which is 2,740. Then discounts allowed, which is 1,126. Then we're having the current account for Nelly and Peter. Then for Nelly is 2,758, and for Peter it is 2,422. And then we're having the capital account, which is the one of Nelly is 54,000, and the one of Peter is 24,000. Then we're having the drawings. The ones of Nelly were 11,000. Then the one of Peter were 8,000. And the debit side and the credit side are balancing off with a figure of 307,730. So that is that with this, and the question is still continuing, and it's giving me additional information. Now with the additional information, I'm having the closing inventory, which was valued at 54,680. And then now I'm having the office expenses owing was shillings 220. Then provision for depreciation on motor vehicle 20% at cost, and office equipment 10% at cost. Then they're saying interest on capital is charged at 10%. Then charge interest on drawings is of the one of Nelly is of this amount, and then the one of Peter is of this amount. So this is the interest, the charge that was charged on both Nelly and Peter for carrying out drawings or extracting drawings from the partnership. Then I've said required, prepare the final set of accounts, which is the income statement, the balance sheet, draw up the capital and the current accounts for the partnership. Now next is the treatment. So I'm going to begin with my additional information, and with the additional information, it's saying that closing inventory was this amount. So me, after knowing this one is straightforward. Then I go to office expenses owing was of this amount, meaning this is an accrued expense. And with an accrued expense, basing from our accounting one, following the double entry, once I'm having accrued expenses, meaning that these expenses are still owing, like I haven't yet paid for them. So what is the treatment? I'm going to debit with the accrued expenses. I'm going to debit the office expense account, meaning that in the office expense account, where is it? In the office expense here, in the office expense account, I'm going to add there this amount, because it means that I only paid for this, and I was still having this figure to pay for, meaning that this office expense account, I will add it there. So meaning I'm going to debit this amount, or I'm going to debit the income statement. You get it? Yeah? So I will debit the income statement with this amount, which will be of the office expense. Then I credit the accrued office expense account, meaning that this accrued expense account, an accrued expense is a liability, meaning I'll put it on the liability side of that means it will go on the balance sheet. The accrued office expense, it will go on the balance sheet as an accrued expense. So me after knowing that the treatment, I move on to the next one, which is provide for depreciation on motor vehicle 20% at cost, and office equipment 10% at cost. This. So after me knowing that, I come, what is the depreciation on motor vehicle? It is 20% of cost, and cost is 18. Motor vehicle at cost is 18,400, which is this. So when I multiply the 18,400 times the 20, I'm going to get 3,680. So me after knowing this, I'm going to hint back in from the double entry concept. What will be my double entry? So with the debiting, I'll be debiting depreciation as an expense, which I will drop on the income statement, and I will credit accumulated depreciation, which I'll put on the balance sheet. After knowing that, I go to the depreciation of office equipment. Same applies. 10% of cost, and my cost was 13,000, which is this, which gives me 1,300. So the double entry, I debit depreciation because it's an expense, which I'll drop on the income statement, and credit the accumulated depreciation, which I will drop on my balance sheet. So me after knowing that, I go to interest on capital is at 10%. So meaning that Nelly and Peter, after giving in their capital contribution, they were given some interest on their capital at 10%. Meaning that, what did Nelly bring in? Nelly brought in capital from the capital account of 54,000, and so Peter brought in 24,000. Meaning that 10 times the 54,000 is equal to 5,400, and then for Peter, the 10% on the capital he contributed, it gave me 2,400. So this is the interest on their capital. So me after knowing that, reading the last, which is straightforward, they're saying charge on interest on drawings of Nelly were 360, and for Peter were 420. So meaning that when Nelly and Peter drew money from the partnership, they were charged some money on their drawings. Nelly of this amount and Peter this amount. So me after knowing that, that means I'm going to begin with, now I'm going to prepare I'm going to look at what I'm required to do, which is the income statement. So I'm going to formulate the income statement. So this is the laid down information of the income statement. So I'm already having, I begin with my title, which is Nelly and Peter income statement for the year ended 30th June 2001. So after knowing that, I'm having sales. Sales, I got it from the question as this. So it is 180,740. So I less with the cost of sales, which is I less and I add there. So with the cost of sales, I'm going to add my closing, my opening stock, which is the opening inventory, which was this 49,940, and my purchases from the question were this, which I come and I added here, which is 143,260, adding them, giving me a total of 193,200. After me knowing this, then I less with my what? Closing inventory. I remember with closing inventory, I already got it from the additional information as this. So the 54,680, I less it with this to get an amount of this, which is going to be 138,520. So this amount, I less it from the sales. When I less it from the sales, I'm going to get my gross profit. My gross profit is going to be 52,220. So me after getting this answer, that's when I'll come and I less the operating expenses. So when I less the operating expenses, I'm having salaries from my question. I'm having salaries of this amount, the 16,800 834. Then office expenses of 2,740 from the question. Now with the office expenses, remember I already told you this was already in the trial balance, so I must add back the one which was what, owing, from the additional information we're having of office expenses owing, which was of this amount. From basing from our double entry here, the treatment, I told you I debit the office expense account, meaning I am going to add it. I'm going to drop it in the income statement on the part of the what? On the part of where I'm going to, meaning that the office expense which I'm having here, which is going to be on the operating, which is going to be on the operating expense, I'm going to add it back. So meaning adding it back, I can decide to add it back straight, or I can decide to separate it, which I have done, saying that I'm going to put the accrued office expenses on the operating expense, meaning this figure was supposed to be there but it was not included, meaning here now I've added it back here, because I'm going to be adding this, you get. So after me doing this, after putting it back, then meaning that the remaining side, which is the credit side, I'm going to drop it on the what? On the balance sheet, which I'll show you. Then after me doing this, then I look at my what? Discounts allowed their operating expenses, which I come and I drop here discount allowed of 1,126. Then after knowing that, I go to my depreciation. Remember, for depreciation I already treated it. I said depreciation with the double entry, this depreciation is going to go on the income statement as this, and the remaining will go on the balance sheet. So both of these I come and I put them here as my depreciation for my motor vehicle of this amount, equipment of this amount. So me, after adding all these, I'm going to get this amount. I got 25,900. So me, after getting this, I'm going to set the gross profit minus the operating expenses. So this minus this, I'm going to get a net profit, which is going to be a net profit of 16,320. So me, after knowing this, I told you now with partnership we get to add there the appropriation account. So this is the appropriation account which I'm going to add there. Remember, I told you you always include these things when they are given in the question. So in the question I have been given interest on drawings. So this is the interest on drawings of Nelly. Interest on drawing of Nelly of this amount. For Peter, for 420 of this amount. When I add this, I'm going to get 780. So 780, so the net profit plus this amount, I'm going to get 17,100. After knowing that, I'm going to less the interest on capital, because it was given in the question, interest on capital of this amount. And I already treated them, and I knew, and I already know what Nelly is having. Nelly is having an interest on capital of 54,000, and Peter of 2,400. For Nelly it is 5,400, and for Peter it is 2,400, which I come and I drop here. After doing this, I get to know their total, which gave me 7,800. So I less it from this. So I less this amount, the 17,100 less the 7,800, and I will be getting my profits to be shared between Nelly and Peter, which is going to be 9,300. So me, after knowing this, now these are the profits to be shared, but how are they going to share them? They are going to share them in the profit sharing ratios, and we already know from the question Nelly was getting 6 and was having 6 and Peter was having 4. So here I'm having Nelly with 6 and then Peter 4, but the total ratio is of 10. When you add 6 plus 4, you're going to get 10. So 6 out of 10 and 4 out of 10. So this ratio, this amount, the profit to be shared, it's what I drop here times the 9,300 times the 9,300. So I'm here, after getting this, when I multiply this, I'm going to get this amount of 5,000 with Nelly, of 5,580, and with Peter I'm going to get 3,720. So me, after getting this, I add these two, and I'll get to see that I'm having a figure which is the same as the profits to be shared, meaning that I've done the right thing. So this must always be equal to this. So me, after doing that, I'll be okay. I'll be okay with the income statement as required, and this will be done. So next, I'm going to take you to the capital and the current accounts of the partners who are Nelly and Peter. So that's what we're going to do next. So looking at the current accounts for Nelly and Peter, I begin with the heading current account. Nelly and Peter current accounts. So I get to know this is my debit side, this is my credit side. So details Nelly Peter, details Nelly Peter. After knowing that, I go back in the question current account. I get to know my current account for Nelly and Peter. It was beginning with this amount here, and that's what I get to drop here. So I write my balance brought down. For Nelly, it is of this amount, which I come and I drop here, 2,758. For Peter, it's of this amount, 2,422. So after knowing that, I go to, I'm seeing here drawings, and drawings are going to be reducing my what? My current account. Then for Nelly, where 11,000. So drawings on the debit side, because the current account will be reducing by debiting, and the drawings are reducing it. So 11,000. Peter 8,000. Then after knowing that, I already know that interest on capital will be increasing the current account. So interest on capital, I already got it from interest on capital. I already got it here, which is 54,000 for Nelly, and for Peter, 5,400 for Nelly, and then for Peter it is 2,400. So which I come and I drop here, Nelly this amount, then Peter this amount. So after me knowing that, I go I also have interest on drawings. So interest on drawings, it's already here, and I'm having these two figures, and I know that they're reducing my current account, which I come and I put on the debit side of this amount and this amount. So me, after knowing that, I'm already having the profits shared. Yeah? So from my income statement, I get to see profits shared, which is Nelly got of this, and Peter got of this. So I come and I drop. Nelly got his 5,508, which is this, and Peter got his 3,720, which is this. So after doing that, meaning that I'll need to balance off. So when I add this side and add this side, I realize that this side, when I add this side, the credit side and the debit side, I realize that the credit side is more. So it is having this amount, the 13,738, and for Peter it's having 8,552. So meaning the credit side, it is big, and it's having these two amounts. So I have to make the debit side also equal to the credit side. So I'm going to say, in order to balance it off, I'm going to say balance carried down. So this is going to be the balance carried down for Nelly. The difference between the total of this minus this amount, it's going to give me this, and the total of these two, the 8,000 plus the 420, the total of these two minus the total here, it's going to give me this amount. So that when I add this plus this, I'm going to get the same total as this. And for this side, when I add these two plus this third one, I'm going to get this. So meaning these two will be equal, and that will be my current account for both Nelly and Peter. Now looking at the capital accounts, because they told me in the question I'm supposed to draw up the capital account. For the capital account, it's easy. Still, I get to do the details Nelly Peter, debit side, credit side. So balance brought forward for my, I get it from the question, which was capital of this 54,000 Nelly and Peter 24,000. So after getting this, I don't have any additional capital. You get, I don't have any additional capital. That means I'm done with the capital account for Nelly and Peter. I'll just need to balance it off by putting 54, because this side will be more. Then this side, to make it equal to this side, I'm going to create a balance carried down for this. I'm not having anything this side, so it's also going to be 54,000 and even 24,000, so that they get to balance off, and I'll be done with the capital account. So next, I'm hinting on on the balance sheet. So next I'll be going to the balance sheet. So now with the balance sheet, I start off with my suite title, Nelly and Peter balance sheet as at 30th June 2001. So I get to begin with my non-current assets, which were motor vehicles and office equipment. The cost from the question was this 13,000 and 18,400. So for the 13 was for office equipment, which is this. For the 18,400 was for motor vehicle, which is this. So remember from my additional information, when I look at motor vehicle, when I'm looking at depreciation on motor vehicle and depreciation on office equipment, remember I was having the credit side here. So this is where I treat it. So on the credit, once I credit, I'll be crediting the accumulated depreciation, which I'll add on to the depreciation which is already in the question. So when I look at depreciation on motor vehicle, this amount here, when I look at, I go back to the trial balance to search for whether I was having depreciation in the question. So yes, I was having a provision for depreciation, meaning that there was already depreciation. So this depreciation of when I get this 7,360, now you pull out your calc, 7,360 plus this amount here, which is of I'm dealing with motor vehicle, yeah, which is 3,680. So this amount plus this, I'm going to add it, and it's going to give me a total accumulated depreciation of 11,040. You get on motor vehicle, which I'll put in brackets so that I'm lessing, so that I can get a net book value. When I say cost minus accumulated depreciation, I'll be getting net book value. So for office equipment, when I'm to go on depreciation, accumulated depreciation of 1,300 plus the one in the question of 3,900. Me after adding using my calc, I'm going to realize that I'm going to be getting a total amount of 5,200, which I also put in bracket. So me after adding those two, the depreciation in the question plus the one which I got from additional information, giving me these two, then I less these two costs. I less this, my cost minus immediately giving me a net book value, which will give me for motor vehicle giving me 7,360, and for office equipment giving me 7,800. So after getting this, this is not necessary adding these two, but you can do it. So when you add this, you get this. When you add also this, you get this negative 6,240. So when I less this with this, I'm going to get this amount. Or when I add this plus this, I'm going to get this amount of 15,160. So me after getting this, that will be my that will be my amount for the non-current assets. So looking at the current assets, I'm going to begin with the closing inventory, and for my closing inventory, I already got it from the question here, closing inventory of this amount, which is this 54,680. Then accounts receivable, from the question, receivable 41,920, which is this. Then cash at bank, from the question, cash at bank of this amount 1,230, which is this 1,230. Cash at hand of this amount 280. So when I add these, I get 98,110 after getting this amount. So I'm going to add this plus this, and I'm going to get my total assets as 113,270. So this will be my amount. So meaning that when I come to the capital and liabilities, so looking at the capitals, so I'm going to be having on the capital section, I'm going to be having the capital account and also the current account. So when I look at the capital account, I must get the balance brought, the balance carried down, or the balance, yeah, I must look at the balance carried down. So what was the balance carried down on capital account for Nelly and Peter? It was 54,000 and Peter 24,000, which I come and I drop here. Then when I add the 2, I get 78,000. Then when I come at the current account, looking at the balance carried down, it was 2,378 for Nelly, which I come and I drop here, 2,378. Then for Peter, 122, which I come and I drop here. I take this balance carried down, which I drop here. So now this, I can decide to put it in the middle, and I add these two, and I get an answer which I'll add with this, but I decided to put it here, meaning I'll add this plus this plus this. And after getting this, I can first work out for the liability. So after adding these two, I can just add on this to get the total. Then I first keep that, then I go to the liabilities. So accounts payable, from the question there must be the accounts payable, which is this 32,550. Accrued expenses. Now this is what I talked about from the additional information I was having. Accrued accrued office expenses owing. So from the double entry, meaning this credit side, I told you with the credit I'm going to credit, but I'll be taking this amount to the balance sheet. So accrued office expense account with this amount, meaning it was a liability which I add to the liabilities of this amount. So when I add this and this, I'm going to be getting a figure here, which is 32,770. So when I add this plus this plus this plus this using your colleague, you find out you'll be getting an answer equal to the total assets, so which will be giving you 113,270. So when this is equal to this, meaning I have balanced off my balance sheet and things are okay, that means I'll be done with the question. So with that, with all that I've given you, it gave you required to determine this, you have determined this and this, so you'll be okay. So thank you so much for watching. Make sure you subscribe for more to get notifications for more videos.